Good afternoon, everybody. Today is Friday. It's the 13th of September, 2013, and this is Brian Shannon speaking from Alphatrends.net. We had a positive week for equities here. The S&P 500 was up close to 2%, Nasdaq 1.5%. Semiconductors led the way, up 3%. We'll talk more about the leadership of the semis here shortly, as we have noted repeatedly. And gold got hit pretty hard, but let's take a look at the markets here on the charts. The S&P 500, of course, was up close to 2%. And looking at a 30-minute time frame, you can see here that we did get up and close this gap down from back in early August. And you know what really happened earlier this week was, let's take a look at the 5-day chart. We started out the week with some strength, gapped higher on Tuesday, and this is the volume weighted average price for the week, which we remained above. And here's our 5-day moving average, which was rising. So we came into the week cautiously optimistic because we were still above that rising 5-day moving average. I was actually hoping that we would kind of pull back a little bit, create a right shoulder here, and then continue to move higher. But it clearly wasn't a short sale with it above a rising 5-day moving average. And the market's not always going to give us the scenario that we're looking for, of course. In fact, seldomly will it, which is why we have to be so flexible in the market. And that's a concept I talk about all the time, is have ideas of where the market can go. Not necessarily trying to make predictions, but understand the key levels and what the path of least resistance is, and have a backup plan. The backup plan was if it broke down below the 5-day moving average and the 5-day moving average started to act as resistance, that we would become much more cautious once again. Those are the scenarios that we have to look at each week, is say next week we've got some important levels to keep an eye on. First up would be about 168.75. That's approximately where we see that rising 5-day moving average, and resistance from earlier in the week, which became support the last couple days. Below that, I wouldn't be concerned, really. I think that would give us reason to be cautious, but I wouldn't be concerned if we came back down towards that 167.5, and I think it would actually be a good thing for this market. The other scenario we have to talk about is that weekly time frame, where we still have the possibility, and it's not a prediction, but it's still a possibility that on the larger scale time frame we're creating a right shoulder. That's just something to be aware of. It's not certainly anything here indicating that we're due for a reversal. The longer term uptrend is clearly still intact here, and it's more so than any year I can remember. This year we've really seen the market climb the wall of worry. Just a week and a half ago, Syria was all of the concern, and really what a lot of people thought was going to be the death of this market, the rally in the equities, and instead we continued up 2% this week. So it shows again that we have to be aware of the headlines and kind of know what drives the psychology of the market, but to interpret that in terms of, okay, I'm scared of the headlines, so therefore I'm going to short the market because I think that's what makes sense. The market doesn't always move the way you think it would logically, you or I would think it would logically, which is why I always say only price pays. We have to follow price. You can say it's only because the Fed is, supporting the market and we have the taper ahead and that sort of thing, and that's all true, or it may be true. I don't know if that's just the only reason the market's up is because the Fed is supporting it. The reason doesn't matter. What matters is the trend. The trend is what pays us, and it's paid to be long. Of course, there's always times where we have to step aside and be cautious and put on selective short sales, but the trend is still clearly higher in all of these markets. The Nasdaq is up at new highs since for the last 10 plus years, and closing in on about that $80 level. There's nothing magical about that level. It's just an area where people are looking on the chart for potential resistance, so we have to be aware of it. It's no different than saying, the PE is 15, therefore it's overvalued or undervalued or whatever you want to say, and I'm just making that number up. Instead, we have to say, okay, here's where it makes sense to be on the alert for potential resistance. But the market, the Nasdaq broke important resistance here this week. Let's back it up to a 65-minute time frame. So again, we use 65-minute candles instead of 60-minute candles because there are 65 periods, 65-minute periods each day. If we were looking at 60-minute charts, the first half hour of the day would count as one full period, and we'd have 7 bars, 6 of which would be 60 minutes, 1 would be 30 minutes. So I hope that makes sense. There is some educational posting at alphatrends.net under the favorite posts if that doesn't make sense about comparing apples and oranges. Anyways, the Nasdaq broke above this 77 and a quarter to 77 to 77 and a quarter. If you recall, we had been talking about the range being 75 to 75 and a quarter as support and resistance at 77 to 77 and a quarter. Well, we broke beyond that, and now we've got some near-term levels of support. We can see that today's low fell approximately the same exact place where Tuesday's low was. So 77 and a half is going to be somewhat important next week, but I think the bigger level is still going to be this 77 to 77 and a quarter. That is, we could pull back down towards here and it won't really do any damage, but if we get below and hold below this level in here, then we have to be on the alert that perhaps it's going to lead to somewhat of a deeper pullback. For now, though, the trends are innocent until proven guilty. We have the Russell 2000, which is fully recovered and is very close to all-time highs once again. The Russell here, we can see, broke beyond this resistance at about the 104-ish level, and we, starting out this week in here, we were positive by breaking that 103. So now, when we look at the 30-minute time frame, you can see that we've got really 103 and a half to 104 is kind of the key band of support that we want to see hold next week. All these markets are above their rising 5-day moving average, and while they may be turning sideways a little bit, they are holding those rising 5-day moving averages. So if we break 104, then 103 looks likely, but that won't do anything to damage the overall uptrend, because now we have the 10 and the 50-day moving average in that area. And looking at the weekly chart, again, we are in a clear uptrend. We've got prior resistance. This market is just stair-stepping higher, where prior levels of resistance turn into support, and then we continue to bounce higher. And here we are up at close to all-time highs in the Russell 2000 once again. And the semiconductors show great leadership this week. Again, they were up 3.1% As we observed back here, they led on the way down, and that got us really cautious about the overall market. It was a week and a half ago that the semiconductors got back above that key level of 38 and have kind of led, provided leadership for the rest of the market. More so, again, than the financials, I think. The semiconductors are more important as a broad-based index that we want to keep an eye on for the overall health, at least of the Nasdaq. On a weekly basis, we closed at a multiple-year high in the semiconductors. When we change the scaling here on this monthly time frame, you can see what we'll do is draw a horizontal line across here at this, about the $40 level, and we're battling levels that have provided resistance back from 2005 and 2007, and breaking beyond here, we could see this market continue up towards maybe 42 and a half, even up to towards 45. There's nothing to say that this will in fact become resistance. We survived a nice little shakeout here, and we are above a rising 5-day moving average. Early next week, we'll keep a close eye on about the $39.20 level. If it's to break that level, then perhaps we're going to fall back down towards 38 and a half. Even 38 would be okay, I think, for the overall uptrend in here. But the semiconductors are providing the leadership, and they closed out, pretty much near the highs for the week. Here, if we take a look at, here's the chart for just these past 5 days. We closed right at the high end of that, and that bodes well for next week. The financials are holding right at, the 50-day moving average down in the bottom left corner. You can see that green number is $20.22. So we're closing below the 50-day moving average. But more important than that is that we got above the key resistance, and we're holding it right now. We're holding above that prior level of resistance. And this kind of goes down to about $19.80, I think is an important level. But for next week, we'll want to see probably $20 hold. If we break below 20, then perhaps we get a little bit more defensive. But looking at here this 65-minute time frame, you can see that the pattern of lower highs and lower lows has been replaced with the higher highs and the higher lows. We can see that in the S&P 500 as well. The pattern of lower highs and lower lows is now higher highs and not such strong pullback, so perhaps we get a pullback that creates a higher low in towards that 168 level. But but we're in solid uptrends. That's the key thing to look at here. Shares of Apple, as we know, they they were coming into the week looking like, well, we had a lot of volatility, and it looked like they were trying to stabilize and perhaps add to these gains. What we saw instead was, of course, that their product release showed a ton of volatility on Tuesday, and then the gap lower on Wednesday. Now, if we take a look at since the gap lower, that is 3 days ago, the volume weighted average price since the event, we can see here that the volume weighted average price is at about 469 right now. So on average, the people who purchased, and you can just see that anyways because we closed near the low end, but the average person who was long Apple lost money this week. That is new purchases. Only very few people who purchased it were in the money. Now, what I pointed out in a blog post at alphatrends.net, or actually I put it out on StockTwits, was a chart of Apple which showed the, well, first of all, this one here. This is since the June 28th low. Now, let's go back to the daily time frame for just a moment. That is since this low right here. Okay, since that low, we've had earnings, we had Carl Icahn, we had a couple of important events. And since that low, the volume weighted average price has provided support on a couple of occasions. That is, the buyers came in at the average price since that event. And now we're kind of flirting with it. And a lot of times, the more times the support level is tested, the more likely it is to fail. My personal opinion is that Apple does continue lower. I think it's got some people's confidence because we're right here at the 50-day moving average. 50-day moving average at 464.92, and here we are at 464.90. I think it's a lot more likely that we continued back down at least towards this level here of about 451. And we look at this daily chart here. What this does is this shows us since January 1st of this year. Now, the orange line is the volume weighted average price for the year. Early in the year, that volume weighted average price for the year as it was developing provided resistance for this market. Now I'm thinking that we'll break the 50-day moving average and come down towards 453. That seems likely to me. I think there's still people that are going to get hurt badly in this stock. Don't be one of them. It's certainly, and if it doesn't hit 453, I still don't think it's a good area to buy this. If they don't scare you out, they'll typically wear you out. And down at that 150 to and 200-day moving average, or just below the 450 level. And again, what we've been looking at the last several weeks was a pullback down towards this level in this trend line. So this trend line where we had resistance act as support would bring us down to that 150 and 200-day moving average once again. So I still think there's a lot of danger in shares of Apple. There's still a lot of great stocks setting up. That's been my theme for the last several weeks, even as we were cautious in the S&P 500 it was breaking down. This weekend, I'm going to do a blog post about Tesla and put that on alphatrends.net. So those of you who look at this on YouTube, go ahead and take a look at that. But Tesla was very interesting this week for a number of reasons. And we'll talk about price action as well as what Mr. Musk had to say. But what we want to do again is keep a focused, disciplined approach to the market. Have a method to the madness. If you look at headlines and if you're trying to bet on earnings and you're sick of chasing the hot stock after it's broken out, what you want to do is take a trial to alphatrends.net, and for 7 days, it's my goal to help you make money each and every day. I want to help you avoid money. I want to help provide education, understand key concepts that maybe you're not familiar with. And I want to do that in a positive environment, whether you join for the chat room and you're a day trader, or if you're looking for the educational videos and the stock trade ideas for swing traders. Take a look at the 7-day trial, and hope everybody had a good week, and enjoy your weekend too. Thanks for tuning in.